home loan rates of major lending banks, which were in the range of 6 to 7% during the pandemic, pretty low for home loans, have now gone up to 8 to 9.5%. If I talk about all the major banks who have the largest market share when it comes to home loans.
But now that we've shifted into our new house, then of course there's that bit about the bank loan, so lots of papers there. So yes, it is, a lot of hard work as well. But it just seems so different, so beautiful, so alive, experienced, so to say. Can't be explained in words.
The budget 23-24 has capped the deduction from capital gains on investment in residential houses under sections 54 and section 54F at rupees 10 crore for better targeting of tax concessions and exemptions. Hello everyone. Namaskar, Salaam, Akal, Vanakkam. We are back with a fresh episode of Keeping It Real by Housing.com. This is India's first real estate-focused podcast. It brings to you updates, views and insights about the realty sector, an explainer on a chosen subject, and a deep dive into an industry, trend or topic. Bureaucrat Himika Chaudhuri shares her Mera Pehla Ghar Story. RBI maintains status quo on interest rates. To dwell deeper on the impact of the same, we have Ankita Sood, Head of Research at Housing.com. The budget 23-24 has capped the deduction from capital gains on investment in residential house under sections 54 and section 54F. What does it imply? Details of all these and much more in this episode. Stay tuned. Your first house is always special. The feeling, the experience, the excitement, the emotions, everything is so overwhelming and distinctive. This is true for everyone. In this episode, we spoke to Himika Chaudhuri, who shared her Mera Pehla Ghar experience with us.
Hi, my name is Himika Chaudhuri, and I would like to share with you my experience of buying my first house, or our first house, me and my husband. So honestly, there is a lot of work that goes into finding your first home, because you're going through multiple number of properties, you're seeing what suits you, you're checking your budget, and that takes about 6 months, as it did for us. And then when we finally zeroed in on the house that we wanted, it was half constructed, and I still remember that, the two of us would go there on Sundays and just standing there and looking around and looking at that half constructed house and visualizing how it's going to be when it's fully made. The joy of that was immense. Then of course there's that bit about the bank loan, so lots of papers there. So yes, it is, a lot of hard work as well. But now that we've shifted into our new house, and just the joy of being there, it's like we're doing the same things that we did in every other house that we've lived in on rent, which is eating, sleeping, cleaning, washing, etc. But it just seems so different, so beautiful, so alive, so joyous. It's an experience that only can be experienced, so to say, can't be explained in words. And I wish that all of you listening to this podcast have the opportunity to experience that feeling sooner than later. Thanks.
The Reserve Bank of India's, the RBI's Monetary Policy Committee, the MPC, on April 6 kept the repo rate, or the rate at which it lends short-term funds to banks, at 6.5%. RBI Governor Shaktikanta Das announced the decision after a 3-day meeting of the rate-setting panel.
The Monetary Policy Committee met on 3rd, 5th and 6th April 2023 and assessed the macroeconomic situation and its outlook. It decided unanimously to keep the policy repo rate unchanged at 6.5% in this meeting, with readiness to act should the situation so warrant.
Dhruv Agarwal, CEO of Housing.com, PropTiger.com and Makan.com said, quote, "The RBI move to leave the repo rate unchanged at 6.5% in its first bi-monthly policy for fiscal 23-24 comes as a major relief for the industry in general and home buyers in particular. If the RBI had gone for another rate hike, lending rates would have reached a record high level that may have impacted the positive buyer sentiment the housing sector has witnessed in the past 1 year." By hitting a pause button in a surprise move, the banking regulator has signaled it is willing to support growth even as it tackles concerns over inflation. Unquote. We spoke to Ankita Sood, head of research at Housing.com, PropTiger.com, and Makan.com to break down the implications of interest rates on property market. Listen in. Hello and a warm welcome, Ankita. Glad to have you again for this show.
Thank you, Gaurav. Thank you for having me.
Interest rates remain at elevated levels as the Reserve Bank of India, RBI, continues its war on taming the inflation genie. Do you think that high interest rates have impacted house sales? What does this say about the overall sentiments in the real estate market from a buyer's point of view?
A very pertinent question. Definitely, Gaurav, we've seen that after maintaining a accommodative stance for, quite some time now during the pandemic, the central bank has consecutively, they started raising the interest rates to tame inflation, which was absolutely, everybody knew about that. Now the interest rates are at 6.5%, and which means that we are already at the 2018 levels. Now, to give a context to our listeners, the home loan rates of major lending banks, which were in the range of 6 to 7% during the pandemic, pretty low for home loans, have now gone up to 8 to 9.5%. If I talk about all the major banks who have the largest market share when it comes to home loans. Now, from a buyer's point of view, the hike in repo rate is a sentiment dampener and reduction is a sentiment booster. So the hike definitely has been a sentiment dampener, especially the consecutive hike, that happened post the pandemic, especially for the end users. As, higher home loans means larger chunks of one's personal income goes out as EMIs. Now, the rate hikes have definitely impacted the affordable and to mid segment, which, responds to the rate hike pretty faster. And policy factors such as, a stamp duty reduction that boosts sentiments. So definitely the consecutive rate hikes have impacted sentiments when I specifically talk about the affordable to mid segment. Now, as a welcome step, the April Monetary Policy Committee has pressed a pause button on the interest rate hike. And, this will definitely help in the sentiment boosting of and reviving the property market, which is on its trajectory, for revival post the pandemic pangs.
Right, Ankita, we are already into the first quarter of 2023. What are the signals you are catching from the property market? 2022 was quite a good year from both demand and new supplies. Sitting in April, what does 2023 look like?
So the first quarter, Gaurav, has been good. I would not say that it has been stunning. As per our recent quarterly data of India's top 8 cities, new supply has reached an all-time high with nearly 1.5 lakh units that were pumped into this particular quarter, the first 3 months of 2023. The fresh supply grew at a staggering 86% in the March quarter. Now, this demonstrates very strong confidence in the market from the supply side, that they know that if they're launching a product, there will be buyers for it. Now, as for demand, sales grew at a relatively slower pace of 22% if we compare it on a yearly basis, with nearly 85,000 odd units that were sold in the primary market in this period. Now we see that property demand going forward in the coming quarters will move in close ranges. Now, why do I say that? We see that the MPC has also pressed a pause button. That's very much to boost the sentiments, if not boost, then I would say to avoid thwarting the sentiments. But there are a lot of macroeconomic headwinds, as we all know, that, could restrict the pace of this revival, and especially any form of change in the rate hikes or the macroeconomic factors impact the affordable and mid to segment the most, because this is the price sensitive segment. So the first quarter has been good, but the coming few months would be very critical if demand can be sustained at the same momentum.
Right. Thank you so much, Ankita, for taking the time out and dropping by to speak to us, as always, and sharing your deep perspectives and insights. Thank you so much.
Thank you. Pleasure always.
The Budget 23-24 has capped the deduction from capital gains on investment in residential houses under Sections 54 and Section 54F at Rs 10 crore for better targeting of tax concessions and exemptions. Let's understand the implications, the changes made to Section 54, and how it will affect property sellers. Earning of any profit is treated as income and taxed under various provisions of the income tax law in India. The same is true for sale proceeds earned from the sale of a property. Based on the holding period of the property, a seller is liable to pay capital gains tax, either long-term capital gains (LTCG) or short-term capital gains (STCG). However, to ensure benefits for owners who sell their existing property to purchase a new one to live in, and not for making money through the same, the income tax law allows deductions under Section 54 and 54F. Deductions under Section 54 are offered only to individuals and Hindu undivided families. Companies, businesses, and other entities cannot apply for this benefit. The deduction is only applicable when a residential property is sold and the gains are invested in another residential property. The sale and purchase of any other type of property, commercial, agricultural, or industrial, are not covered under Section 54. To claim deductions under Section 54, you must hold the property for a long term. The income tax law defines 24 months or 2 years as long term. If the property is sold within this period, the gain would be treated as short-term capital gain, and exemption under Section 54 will not be applicable. As per the amendment made to Section 54 through the Finance Act 2020, a taxpayer can claim deductions under this provision on the investment made in 2 residential properties. The exemption on investment in the purchase or construction of 2 residential properties is available. The exemption on investment in the purchase or construction of 2 residential properties is available if the amount of the LTCG does not exceed Rs 2 crore. Note that this option can be exercised only once. A timeline has been set for the new purchase to claim Section 54 deduction. The investment in the new property must be made within 2 years of the sale of the previous home. In case the new home is bought before the sale of the old house, you can still claim deductions under Section 54 if the purchase was made not more than a year before the sale. Suppose you sold the old house in January 2021 and you bought the new house in January 2020, you will be able to claim Section 54 deductions as long as you fulfill the other conditions. An under construction property must be completed within 3 years of the sale of the old house. Section 54 deduction can be claimed even if you booked a new home or started the construction before the sale of the old home. For better targeting of tax concessions and exemptions, deduction from capital gains on investment in residential house has been capped at Rs 10 crore in the Budget 23-24. Irrespective of the property type, under construction or ready to move in deductions under Section 54 is reckoned from the date of possession of the new residential house. That's it from us for this episode. We shall be back again with a fresh episode of Keeping It Real by Housing.com with information and insights on the real estate industry. You can catch the episode on Housing.com, on the Housing.com app, on Earshot.in, Spotify.com, Apple Podcasts, Google Podcasts, Ghana.com, and Geo7. Take care and stay safe.